Okay, so Apple has something nice going on in the charts I mentioned before, so I want to talk about that today because it can be setting up for a pretty decent retracement, letting the price go up much higher. But I'm going to talk about that more in a second because the the current uptrend is quite still alive. It's very strong. The RSI is still showing bullish momentum, but regardless, what are the ideal setups, right? Instead of just going in FOMO in due to higher prices. Let's take a closer look. So bigger picture, and then we'll go ahead and narrow this down. So right now, quite simply, you guys can already tell there's a decent uptrend floor right here, the support. And then if we use this going forward a little bit, the most recent retracement that we had here, we can measure that with the current all-time high. But I believe that's an all-time high. So we'll do that. We'll do that. This gives the price enough time to come down and near that uptrending support. Although, as you can see, it doesn't always have to hit it. That's just why the RSI really comes in. So I want to see the price potentially come down, break below the 120 moving average. Like it's had, it's done this many times before. We'll just go ahead and use the current retracement I gave you guys, which will be under the 120 moving average, but still holding that support line. It's as simple as that, right? So then if we go forward, and by the way, let's measure that drop from right now. That's still a very aggressive drop. 16%. The previous retracement, 30, 35. We see double digit drops frequently enough. They tend to last a little bit. So this still falls in line with normal price action, 32%. So this is very much still in line with realistic expectations. So from the top, actually, 20 to 25, still in line, pretty good. All right, so with this being said, though, potential tops forming. Well, if we look at every single retracement within the most recent rally, a lot of it pretty much none of it comes down breaking below retracement. So this one found nice support, still valid. If we go ahead and measure the following uptrend right here, held within it perfectly. Every other one after that never breaks below it, as you can see. Still holding it very, very well. One more. This one right here held it very nicely. So these are all very healthy retracements, except this last one indicating that we could potentially start to see this ideal setup present itself soon enough. But this one held nicely. It was this one right here. This one broke below it very, very clearly. We could potentially start coming down lower. So what I just want to make very clear, though, again, because everything I say in this video is just my own personal opinion, and it's not me telling you guys what to do. Instead, I just like to share with you guys what I'm doing. But I'm not very interested in buying any short-term longs, especially any calls at the moment until we break this 120 moving average. I'm very much interested, actually. I think there's a lot of good opportunities with like 1 to 3 month out expiration dates, or even sooner than that. It just depends what we're looking at. So I'll keep you guys updated on this. But quite simple. If we can come down into this retracement, very realistic as well. We'll break below the 120 moving average. RSI will start showing discounts, and then I'm interested in capturing different position strikes. For some calls within this zone. And then that's plenty of time for the uptrend to still do its thing. As of right now, due to the uptrend still being alive and we haven't actually invalidated it, in this case, it will be major swing lows, like where the support gets touched. Major swing lows get broken. This will be an invalidation point that there is a much larger correction happening. But as simple as that, I believe this is where the money's at right now. It's simple. It's letting this come down into here. When it comes to the equity trades itself, we know that still averaging in around 230. Yeah, like a 230 average price targeting that as of right now, because it hasn't happened yet. Even just back up to the high, that's 25%. So I mean, this is looking really attractive. I mean, regardless of what the Federal Reserve said in that yesterday emergency meeting, this doesn't really change the fact at all of what those job numbers are looking like. It doesn't change the fact that, you know, inflation and jobs are all just doing what they're doing. It doesn't matter what the Federal Reserve says. So this next meeting, because it was a 50-50 split on whether or not they, 50% of them don't want to cut, 50% do want to cut. Regardless, this is still setting up for a nice 2026. So if we can start off the year weak in January, coming down into this zone right here, again averaging 230. I'm personally looking at some longs. It depends though when we come down here, what's going on, but it will either be like a multi-month calls or it might even be short in that. But again, I'll keep you guys updated because as of right now, this price can easily trend higher, but due to simple, you know, super simple tools right here, like we have our ascending resistance as well. I would say the majority of those highs are within this zone right here. So it's simple. It's capturing this channel going higher. As of right now, we want it to come down into the lower boundaries. And then from there, a little bit of this somewhere around in there, right? And then we go up and then potentially even up, continue the uptrend. But until this is invalidated, this is what I'm looking for. And this is the most realistic and the most, like, this isn't even like a hyped setup either. Like, this is a super realistic one. I think you guys can see it quite clearly. So yeah, hopefully this video made sense, guys. It's a super quick Apple stock update. I'll keep you guys updated on this because I'm very interested in capturing some longs or opening some longs with Apple. But as of right now, AAPL, short-term overpriced just from this alone that I showed you. We can get a really nice below 120 moving average buying opportunity within retracements. And again, this was the last time we had a high where the retracement was invalidated. So this one, as you can see, it went up high and it would have broken below that retracement right here. It happened and then we started the trend downward. So when it comes to the micro picture, if we consider now where it can top out at, it either already did or we'll see a little bit of appreciation, maybe 280, 281, not really going higher than that, but it can max out at that point, just like back here where the price maxed it out. It couldn't really hold above it. A red candle closed above it and then it came down below. But this one just didn't hold above and it came down below. So it's as simple as that. It's understanding where the trend is at. Right now the trend is moving higher, but we are on the top portions of the channel. We want to come down, buy in this zone, and then easy money higher. We know the Fed is setting up for this. We know the only thing that's really interested in starting a bear market right now is Bitcoin, but we'll see. We still have some time with this. We haven't really invalidated the uptrend. This swing low right here at 74.3 is really the invalidation point, and then we can close the gap somewhere between 50 to 30,000 overall bottom support for a potential quick bear market as well, because I believe this is going to be a short-lived one, but we will see. Right, time will tell. Either way, yeah, that's my view on Apple right now. I want to talk about Microsoft soon. I want to talk about a few other things, but I'll keep you guys updated on Apple. Yeah, hopefully you guys enjoyed, and I'll catch you guys in the next one.